On today's Hashi, I'm discussing housing inventory and analysis on how underbuilt the housing market is, plus the metros with the largest home price gains in quarter four. Today is Monday, February the 12th, 2024. I am Byron Lazine, and the hot sheet starts now. Welcome into the hot sheet here, and love to know which market you're tuning in live from. I sit here in my Naples, Florida studio. I hope everybody had a great weekend, an enjoyable Super Bowl Sunday if you watched. Some interesting money being pushed into the advertising landscape, particularly by one company. I'll get to that here at the end. I also want to remind you that this Friday, we have a major announcement about the future of this show, the future of the hot sheet. So make sure that you are subscribed and tuned in all week so you do not miss that. All right, let's get into housing inventory as we do every single Monday here on the hot sheet. According to Altos Research, the weekly inventory change was down, but not down by a lot. We went from 497,000 the week prior plus to 494, almost 495,000, just really about 2,500 less active inventory this past week from the week prior. That's significantly better than the same week last year, when we dropped from 457,000, almost 458,000 active inventory, all the way down to 444,000. There's about a 50,000 active inventory difference in units from this year to last year. It isn't getting us to where we need to be in 2019 levels, which I would consider a normal market. If we go to 2019 this time of year, we're talking about 800,000 plus on the active inventory, but it is a sign that we're heading in the right direction on inventory. Just this weekend, I was talking to somebody who's thinking about coming down to Naples and wants to spend a couple of months. Often people do that this time of year. And he asked me, wow, gee, it looks like nothing is selling. I said, well, I wouldn't say nothing is selling, but inventory is certainly starting to stack up. It's a story along the entire west coast of Florida. It might be a story in your market as well, where things are just not selling as quickly as they once did. The prices we haven't seen come down. Ultimately, the longer inventory sits, those real sellers will reduce price, and you'll start to see prices level off, or even in those markets, like we've seen in Austin, Texas, start to get reduced. I said the market is starting to show some signs right now of activity, but it's nothing like it was 1 year ago. And that's one of the reasons we're seeing inventory go up in some markets, and obviously it's not happening in all, but obviously reflecting this across the country. Okay. In 2000, I showed you 2019 up over 800,000, 2015 we're up over 947,000. So still a long way away from what we would consider a healthy active inventory market. There we sit today, and same week last year, we were here. So draw a line across that, and you can see on the graph, which obviously we'll have everything linked up below for you in BAM, or linked up into BAMX for the members. Okay, new listing data. This is something that I think is definitely to be something to be excited about. We just saw a big pop, and it's something we called for last week. Can we get a big pop in new listings? 51,875 compared to the same week last year at 44,533. I would call a pop, one of significance. You can see here on the line graph how significant that is. It took us until last year, it took us until March 11th, and we didn't even get there. So really, until we passed that line, it took us till April 8th on new listing inventory, new listings for the week. So we'll see if this trend line continues, where we get more sellers coming to the market. It's something that Zillow predicted at the beginning of this year would happen, that sellers would be coming to the market more comfortable with their ability to find a home, more comfortable with the rates on their purchase side. And this past week, new listing data beating 2023 and 2022 by a comfortable margin. That will also help, obviously, with active inventories as we move forward. We're also not seeing, as much as the inventory is up, modestly up, we are not seeing price cuts yet that would reflect anxious sellers. They're not feeling like they have to reduce in order to sell. We're below last year's level of price reductions, sitting at 30.1% compared to 30.2% last year. Obviously not near the lows of 22 when we were at 18.3%. Okay. Love to know what your market looks like on inventory. Is it heading up, or is it like the west coast of Florida in that example I gave, or is it heading down? We know in the Northeast, year over year, it's significantly down, which is just mind-boggling when you look at other parts of the country. Let me know in the comments what your market is experiencing. One of the reasons why your market is probably experiencing low inventory, even if it's up from last year, it's certainly historically near a historic low mark, is because of how underbuilt this market is. Megan Malice, who is a new member of Resi Club with Lance, just completed a study, 11 studies that she combined to make one conclusion. The U.S. housing market is significantly underbuilt. So she took 11 studies, combined them together to show where everybody is in line. There's not like a 50-50 conversation. Hey, is the U.S. housing market overbuilt, underbuilt? And you've got, people debating this. You have a consensus. This is like Lamar Jackson winning the MVP. Everybody except one person unanimously voted for him for the MVP. I don't know who that was, but this is a near consensus on, is the housing market underbuilt? The answer overwhelmingly is yes. Okay. The housing shortage told by 11 major firms. Fannie Mae says 4.4 million. Zillow says 4.3 million. Bank of America, 4 million. So those are the three up over 4 million. Excuse me. I've got a little bit of a head cold battling here. Not like a quote unquote head cold from Super. I want to be clear. Not a, I have a head cold partying last. No, had popcorn with my daughter and had sparkling water. Very much did nothing for the Super Bowl. Like a legit head cold. Okay. Anyways, 3.8 million on Freddie Mac. NAR says 3 million underbuilt. Realtor 2.3. Morgan Stanley coming in at 2 million. JP Morgan coming at 2 million. John Burns, research and consultant, 1.7. Moody's Analytics, 1.7. And Zonda, 1 million. So, some of these bigger numbers, it's interesting because we saw ranges from 2 to 7 million. Now they've kind of come down off of that number. Maybe that's based off of affordability. Certain people have just gotten priced out of the market with where rates are. And I would argue that when you look at these numbers, be thinking, well, what price are they coming at? If you build $4 million, $2 million homes, that's not going to solve how significantly underbuilt the U.S. housing market is. Okay. Fourth quarter of 2023, more than 85% of, the average estimate, from 11 is underbuilt by 2.745 units. Right now, 2.745 million units short. That's the average when you take these 11 studies combined. And so right now we're calling the range 1 million to 4.4 million, where when rates were lower, we were calling that range 2 to 7 million. Okay. So you remember that 2 to 7. Now they've reduced that to 1 to 4.4 million. So just for conversations, when people say, hey, do we need more homes nationally? 11 studies have found that on average, we got about 2.75 million homes short to meet demand. But those studies range from 1 million to 4.4 million homes. So that is the range currently right now for multifamily housing supply, available in your show notes for all of BAMX members. You can sign up for BAMX using the link below. The U.S. housing market is expected to witness a significant influx of multifamily housing in 24 and 25, talking about that. Some of it came in 23. It's one of the reasons why rent prices have flattened and some markets even gone down. It's one of the reasons that, you know, Jerome Powell would like to see people go and fill up those units because it stabilizes pricing for them as opposed to people buying. Why multifamily supply could alleviate the housing shortage and may not fully address the lack of single family inventory. Yeah, I don't think that it will. You do find some, but you don't find a majority of home sellers selling single family saying like to go into multifamily apartment housing. Usually it's a move up or maybe some type of a move down square footage wise. It's typically what you get with a single family home seller. There's some, and I've seen it in the last year or two that said, hey, I'm going to rent for a year or 2 years, a season of my life to see where this market goes. And if they did that in Southwest Florida, they'd be like, oh, there's more inventory now. So I've got more options. Prices haven't really come down, but I have more options. Maybe you've seen that in your market. While some markets, particularly urban centers, are seeing increases in high-end rental supply, this is one of the things I think is just useless, but there's no market considered overbuilt in the affordable housing market segment. Nothing is overbuilt in affordable. And I think we'll be saying that for years to come. Okay. The consensus among researchers is that more housing is needed to address the housing shortage in the US. That is the consensus. And 11 studies prove that out. And we already knew that. But I do think it's important for us to recognize that that number we've been talking about, 2 to 7 million, 2.5 million to 7 million, has now been reduced. They've altered that. That has a lot to do with affordability. Okay. A recent NAR report shows that single family existing sale prices increase in 86% of metro areas, 189 of 221. Here's another reason why it's become a little bit less affordable, not just the rates, but the prices that continue to increase due to this lack of supply that we just talked about. Okay, so that's up from 82% in the previous quarter. The fourth quarter of 23, more than 85% of metro markets witnessed home price increases. Okay, the metro markets, we've got the top 10 with the largest single family home price gains. I'll share that with you. We've got obviously all of our slides and downloads available inside of BAMX for you. Here are the largest metro area percent gains from metro areas, and these are big. We talk about some of the double-digit gains in the Northeast, but almost every region you can find a metro with a double-digit gain. You've got a market in Wisconsin here. I'll show it to you instead of trying to butcher the name. 18.6% increase. Bloomington, 15.4%. Bristol, Tennessee, 19.2%. Anaheim, 14.8%. Salinas, California, 17.1%. Oxford, Alabama, 15.7%. Johnson City, 15.2% in Tennessee. Trenton, 17.3%. And New Jersey, 16.7%. Dayton, Ohio at 19.9%. These are monster increases here, according to NAR in their recent report. The South posted the largest share of single-family existing home sales, 45% in the fourth quarter, with a year-over-year price appreciation of 3.2%. Year-over-year price appreciation was observed in Northeast at 7.3%, Midwest at 4.7%, and West at 4.2%. Less than 1/5 of markets, 14%, experienced home price declines in the fourth quarter. It's down from 17% at the end of the third quarter. 8 of the top 10 most expensive markets in the U.S., again, were in California. So there you go on some of the largest home price gains, obviously being elevated by the shortage that we just talked about and how underbuilt this U.S. housing market is. What is not underbuilt is the budget from homes.com. We posted an article this morning breaking down all of the real estate Super Bowl commercials. CoStar has taken the lead. They had 4 of them, 1 for apartments.com and 3 for homes.com. Zillow and realtor.com sat it out. We also, in this article, we've linked up all of their commercials if you missed them. Listen, the homes.com one, going into the local hair salon and saying this is where you get like all the best neighborhood info is at your local hair salon. My mom was a hairdresser. That is absolutely true. I used to get so many referrals before my mom retired. It is if you're not friends with multiple hairstylists, you need to be if you're in real estate. If you're looking for deals as an investor, if you're a real estate agent looking to make more contacts, that is like the barber shop for that the hairs. I think the hair salon even more so is a conversation starter for all things housing. And there's a lot of deals to be found. So the fact that homes.com knew this and actually made a commercial about it tells me they've got some pretty smart people in there. And then you've got this Open Door halftime show. I'll probably do a reaction to that at some point this week. It I mean, if you haven't seen, it's a 10-minute showing people. This is how easy it is to sell a home. So it's like, okay, here's a FaceTime. I'm going to walk you through two homeowners in Atlanta, or a couple in Atlanta, a homeowner going through and put them on Zoom. But it's like, oh, I'm going to get that offer right over to you. Okay, so you can do that in 10 minutes. I can get an offer from my house in 10 minutes. I can walk outside and find somebody that'll pay me under what it's worth. I mean, I could walk outside my office. Somebody offered me money thinking I'm, going to be selling my house soon down here. So you can get an offer from anybody. Open Door will make you an offer, sure, but is it the right offer? What are the fees? What are all these things associated with it? I may do a reaction to that and just break it down. I thought Homes.com did a phenomenal job with their Super Bowl commercials. I saw on Twitter X that there was some pretty good reviews there. What's interesting about, I don't know if people are catching this on Homes.com. You can read the whole article. Maybe Haley can throw, or I think Bobby's on today. Maybe Bobby can throw it into the live chat for you or into the description. But if you look who this is right here, this guy's face, anybody in the comments know who this is and the significance of him being in the Homes.com commercial? Anybody know the significance here? This is Dan Levy, who was in the Zillow SNL skit, which Zillow said that was very organic. We had nothing to do with that, but it was on the day of their earnings call. So what a coincidence that is. I think they had a little bit of something to do with it. So Holmes goes and casts Dan Levy from Zillow's SNL skit that went viral and put him into their commercials. Just kind of a baller move right there. Okay, so there you go. Let's take a look at the 10 years. We start this week. We've got a 10-year sitting at 4.163. We can't get out of this. We're kind of stuck right here in the last week or week and a half anyways on the 10-year. Love to see us get back under 4. Not the case right now, which has left us in the high 6s, damn near 7 on the 30-year fix. We broke 7 on February the 5th, and we've just been in the high 6.9s ever since then. We ended the week last week at 6.98 on the daily, 6.64 on the weekly. We'll see where it goes this week as we look for obviously more inflation data and economic data and see how the markets react to it. Hope everybody has a great week. Great start to the week here on this Monday. Hope I have my head cold gone by tomorrow. And I hope that you stay tuned with us all week. Make sure you're subscribed. We have a major announcement about the future of this show coming on Friday. So hope all of you will join for that. And until tomorrow, 9:30 on the East, 6:30 on the West, of course, toodaloo.